Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. Is a world famous salad shop a good investment? In this video we will be analyzing if Sweetgreen Stock is a buy. Will Sweetgreen Stock, ticker symbol SG, continue to rise to the restaurant heavens? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Sweetgreen. Sweetgreen was founded in 2007 by college grads in Washington, D.C. who started with a simple idea: healthy, delicious salads made with seasonal ingredients. After going public in November 2021, Sweetgreen has made a splash and marked a significant step in their growth journey. Today, they've grown into a national chain with over 140 locations and are leaning into innovation. With over 5,000 employees, Sweetgreen is still based in Washington, D.C. Now let's look at the price action. Starting with the 1-year chart, we see that Sweetgreen had a CAGR of about 187%. Zooming out to the 5-year chart, we see that Sweetgreen had a CAGR of -28% over the past 2.5 years. Sweetgreen share price had been a rapid gainer in the past year, and it looks like the momentum will continue. If we perform a backtest comparison of investing $10,000 in Sweetgreen versus the S&P 500, we find some interesting results for Sweetgreen. In that comparison with the S&P 500, $10,000 invested in Sweetgreen would have shrunk to $7,022, or a -14% CAGR, versus $10,939 or an 4% CAGR if invested in the S&P 500. This demonstrates underperformance for Sweetgreen. A Sweetgreen investment would have also been much more volatile, with a 92% standard deviation versus 19% for the S&P 500. Sweetgreen outperformed the S&P 500 in terms of the best year performance, for which Sweetgreen grew 99% versus S&P 500 26%, but underperformed the worst year performance, where Sweetgreen fell 73% versus the S&P 500 18% fall. In terms of max drawdown, Sweetgreen fell 76%, about 3 times more than the max drawdown of 24% for the S&P 500. Surprisingly, Sweetgreen outperformed the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio due to its excess volatility. Now let's hop over to market share and take a look at Sweetgreen's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under restaurants and see that Sweetgreen is categorized under fast food restaurants. Expanding the fast food restaurants tab, we can see that Sweetgreen has the second smallest market share but is expanding rapidly. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Sweetgreen, SG, and see that the market share is 0.06% out of the publicly traded food, beverage, and restaurant stocks currently in the market. Sweetgreen is a tiny company, but it is growing. The 5-year market share CAGR for Sweetgreen is 12.71%. This means that Sweetgreen's is doubling its market share every 6 years. If we start in 2019, we see that the market share was 0.038%, 0.031% in 2020, 0.041% in 2021, 0.051% in 2022. And rose to 0.061% over the trailing 12 months. After the dip in 2020, market share has expanded at a strong, steady pace. In this version of market share, we can also compare Sweetgreen with other companies or entire industries. When we type in the ticker symbol for Chipotle, another relatively healthy restaurant, we can compare the market share data for those two companies. Sweetgreen holds about a 5.6% share of the revenue from those two companies. More surprisingly, Sweetgreen is outpacing Chipotle in expansion pretty handily. Let's take a look at the fundamentals to learn more. Gross margin is 18%. This is on par with expectations. Revenue has compounded at around 21% over the past 5 years and has reached over $584 million most recently. This is so sweet and green. Looking at cash flow, we see that operating cash flow has finally flipped positive, while capex has worsened at a 23% CAGR. As a result, free cash flow has actually improved at a 5% CAGR. Sweetgreen has a long way to go before they become free cash flow positive, but positive operating cash flow is the first step. Meanwhile, management is aggressively spending capex on expansion. This is a great strategy until it isn't. Weighted average shares outstanding have increased since IPO, going from 110 million shares in 2022 to 112 million shares most recently. Sweetgreen has been diluting shareholders. Again, once Sweetgreen can hit free cash flow positivity, then management will not have to keep diluting shareholders. Now let's view return on invested capital. Return on invested capital has risen from -55.6% in 2021 to -18.2% in 2023. Though this value is still negative, Sweetgreen is slowly moving toward flipping this important metric positive. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from -8 days in 2020 to -8 days most recently, Sweetgreen has had no change in efficiency over time. The good news is that -8 days is a great value and shows strong operational leverage. Last, let's look at Sweetgreen's debt. The net debt to EBITDA has fallen over the past 5 years, going from 4.8 in 2019 to -0.7 most recently. Given that the company is unprofitable, this negative value is not good. I do expect the debt to rise in the near term as the company will need to finance operations until they produce free cash flow. The fundamentals of Sweetgreen are mostly good. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the food fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Sweetgreen. It is a restaurant company with a gross margin of 18%. The 5-year revenue per share CAGR is -27% and the 5-year free cash flow per share CAGR is 42%. This is because of the massive shareholder dilution. Over the past year, revenue per share has increased at a 10% CAGR and free cash flow per share at a 54% CAGR. A return on invested capital of -18% in this context means that the company is still unprofitable. Next, the cash conversion cycle of -8 days is really good and is perhaps one of the strongest metrics for this company. Concerning debt, a net debt to EBITDA of -0.7 means that the company is unprofitable. So from a fundamental standpoint, Sweetgreen looks pretty good for an unprofitable company. Now let's switch our attention over to valuation. Sweetgreen is negatively valued relative to the S&P 500 with a ratio of -0.8. The price to earnings growth, or PEG ratio, could not be calculated due to the negative projected earnings. Sweetgreen continues to be a phenomenal growth story. Market share is rapidly expanding and operating cash flow has finally flipped positive. The company has also done a great job managing their suppliers, customers, and inventory with a cash conversion cycle of -8 days. However, the jury is still out on if the other metrics will turn out to be positive. Only time will tell if Sweetgreen's aggressive capex spend to expand their footprint is worth it. In fact, it looks like management is starting to slow the rate of expansion. Over the recent quarters, Sweetgreen has slowed the net number of new restaurant openings from 10 in Q4 2022 to 1 in Q4 2024. It is not clear why this rate has slowed, but Sweetgreen did say that they plan to open 5 to 6 net new restaurants in Q1 2024, so we will be on the lookout for this metric. Sweetgreen still has a lot to keep me intrigued, but only if it can thread the needle of cost-efficient market share growth while moving towards positive free cash flow. For me, Sweetgreen will stay on the watch list. Many thanks for watching. What do you think about Sweetgreen, and please be sure to let me know what other companies you want me to analyze. Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.